Good day, everyone. You're welcome to another session of our accounting training, our practical accounting training. Gradually, we are getting into the real deal. Gradually, we are getting into the real deal of the training, which is to learn how to prepare financial reports. And for us to be able to understand this process very well, there's it for us to understand this very critical topic, which is the accounting cycle. So, what is the accounting cycle? And from the theme of this training, it is practical. So we are going to be looking at we are not going to be looking at the textbook definition of the accounting cycle. So what is really the accounting cycle? In practice, accounting cycle is just the various stages or the various steps that accountants take to transform ordinary business transaction into data that can fit into the financial report. So the idea is that the series of transactions that businesses make on a daily basis sometimes runs into thousands in a year. For this transaction to fit into the accounting report, or let me say the financial report, it has to be refined. It has to be shaped into data or information that can actually fit into the financial statement. Another reason we have to go with the accounting cycle is because of the principles or some principles of accounting, like the double entry principles that states for every transaction when you debit the receiver, you must also credit the giver. And the other one is the accounting equation that mandate us to make sure that the total sum of all the assets must be equal to the sum of the liability and the equity. The major purpose of the double entry principle, for instance, is to reduce error and help us to be able to prepare the balance sheet, or if you want to give it a fancy name, statement of financial position. That is the reason we have to go through the accounting concept, which is to reduce error on the financial statement and to able to help us prepare our balance sheet very well. So, what are those steps that the accounting cycle entails? What are those steps? We have about 7 of the steps, or let me say stages, but some accountants, some seniors will say there are 8, some will say there are 10, there are 12. Yes, it depends on how you want to do it. Remember, accounting is also said to be an art, so you have to be creative. Depends on how you want to go about it. So, but in this training, we are going to just pick 7 stages of accounting cycle. That is what we are going to use in this training. The first one is the execution of transaction. That is collection of data. That is data gathering. That is the first one. The second one is analyzing and summarizing this transaction. That is the concept. The third step is to enter transaction input the correct journal. The fourth one is transferring the transaction to the general ledger, creating the trial balance, making adjusting entry, and crafting financial statements. So now crafting financial statements. In this training, the financial statements will be divided into 3. That is, we will look at how to prepare the income statements. We will look what are the stages, what are the steps, how do you follow up with it, how do you do adjustment on it, how do we make sure the income statement is balanced, meaning how do you make sure it's correct. So we also know how do you balance the balance sheet and the statement of cash flow. So now let's look at each of these steps one by one. The first step, which is the collecting data on transaction, will be done now using slides, using PowerPoint slide which I'm using now. But from the step 2, which is analyzing and summarizing of transaction, to crafting financial statement, which is preparing of financial statements, would be done using Excel. Will be done using Excel. So from the second one, from the second video to the last one, to the preparing of financial statements, will be done using Excel. So now let's look at the first stage. Let's look at the first stage. The first stage of the accounting cycle, which is execution of transaction, which is collecting data on transaction. In practice, you will likely not know when transaction occur, nor how it was executed. In practice, you will not know how some of these business owners make their transaction. You will not even be there. So our focus in this training will be based on small businesses. Our senior colleague will call small businesses one-man business or one-man show. Some of them are, but some of these small businesses, some of this one-man show they are actually limited liability company, but still one-man show. That is, one man decide on everything about the business. He makes all the decision pertaining to the business. Sometimes they may have process or structure. Most of these small businesses, most of them may have process. Most of the time, the small businesses might have structure. And as accountants, you might be aware when this transaction actually occur. Maybe you would even be the one that would raise invoice, prepare their budget, and monitor some of their expenses. But we're not going to look at that. We are looking at small businesses whereby when decision is of transaction is taken, whether to render a service or to sell a product is being made, you will not be there as an accountant, and as such you would not know whether this transaction even occurred. So the only thing you can rely on now is the bank statement. That is where you can get your data from, instead of getting them from source documents like the invoice, the purchase order, and the voucher. These are like those invoice, the voucher, these are like the few supporting documents you can lay your hands on. So what you will get in practice is that you will only see bank statements. In real life, most of the thing you will see is bank statement, because most of them don't actually keep most of those their records there. So the bank will do it for you. So instead of looking at the execution of transactions, what we will focus on here is that when you are in practice, at this stage, what you will get is you will likely be gathering data. This is the stage where you will gather data. Account preparation is about gathering data, and that is the bookkeeping aspects of it. This time that you want to gather your data, someone or a bookkeeper ought to have prepared this data for you as an accountant. The bookkeeper ought to have journalized all transactions, ought to have come up with a trial balance. That is where the job of the bookkeeper ends, and is expected to present it to the accountant, and the accountant make adjustment and prepare the accounts. So what we will look out here is how do you business who are not part of the transaction, when the transaction was executed or initiated. But in practice, because some of you that will likely start your own side hustle, or start your own accounting business or bookkeeping business, then this process is where you will gather your data. That is for most of you actually start your side hustle in accounting, or maybe have your own accounting business or your normal business, this process is what you will use to gather your data. So to me, the most important data that you must request from a client or from your employer when you are preparing accounts, let's say for the first time, is the bank statement. Yes, there are other source documents, but the bank statement is the hardest. It's more like an incomplete record. It is even more difficult to prepare accounts from an incomplete record. The other side is when income and expenditure is being tracked. If it is being tracked, then your job is almost complete, and if it will get better, it means someone have kept a proper bookkeeping record. Your job your job gets easier in that line. But when there is no record at all, then the first document you would request for is the bank statement. And the reason is that small businesses or registered businesses, most of their transaction would go through the bank. Even when they are making some cash transaction, the cash must have been gotten from the bank. So so we would want to assume or believe that all transactions are coming from the bank. So what are what are those information you should request for when gathering data to prepare accounts for the business? What are those information that you should request for? The first one there is to ask for the cash book if they are maintaining one in the office. And next one is, if the business is using more than one account, ask for the updated bank account number, the address, and the authorized signature. And this one is very compulsory. Ask for the bank statement in Excel format. Tell them to send you the bank statement in Excel format, because that will actually make your work more faster and easier compared to sending it in picture form or PDF, because you will need to start retyping everything. And but Excel format is very, 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 very good. But though there are still some, even though they send it in PDF format, there are still some sites you can use to convert the PDF into Excel. But I will not advise anybody to use a converted PDF Excel file to do accounting, because there might be changes or mistake. So the next item there is for you to ask for the schedule of PPE. Ask for the list of PPE, which is property, plant, and equipment. Ask for the supporting documents like the receipts of all the property, plant, and equipment, so that you can get the dates of purchase and compute your depreciation. So also ask the business if there's any loan agreement signed by the company. Ask again for receivable schedule detailing the customer who owes the business, and the amount the customer owes. And also ask for the people the customer owing. Let the customer list the people that he is owing and how much he is owing them. And also another thing to ask for is the prepaid expenses, which refers to payments made for services not yet rendered, maybe like rent and insurance. And that one again is the accrued expenses, which are services received but not yet paid for, unlike unpaid salary. And another information you should ask for is deposit by customer, that is money received for services yet to be rendered, all payments, voucher, all receipt and invoice raised during the period until date, the list of staff and salary in employment during the period, if any, so that they can use it to compute your payee and also add it as an expenses in the statement of profit and loss. And they also ask the person to list the services or type of goods they render. Also ask the person to give you the sales record, their purchase record, that is the things they bought, and sales record, the things they sold, their rent agreement and payments to date, if any. And also, if it's a company, ask the person to give you his CAC registration and some other utility bills. So these are the information you should ask for when gathering your your data.